Welcome back. This is Budget Breakfast. With just few hours to go for the budget, sources say that the government plans on a big push on the poverty alleviation front through a hike in fund allocation towards the National Social Assistance Program in FY20. The big question is whether these plans will manifest in the interim budget or not. Anshu Sharma is here to fill us in with those exclusive details. Anshu.
That's right. We understand from sources that poverty alleviation will be a key issue to watch out for both budget and election. Sources indicate government may look at hiking budget allocation towards National Social Assistance Program, which comes under Rural Development Ministry. Under NSAP or National Social Assistance Program, funds are directly transferred to beneficiaries for schemes like old age pension, pension for specially abled and widow pension. Last year, budgetary allocation for NSAP was at 9,975 crore rupees. Meanwhile, for the upcoming general election, the government is set to highlight its rural development achievements in a big way. Some of the highlights will be like building of over 44 lakh houses under Pradhan Mantri Awas Yojana till FY18 against 10.53 lakh houses built until FY14. Pace of road building under Pradhan Mantri Sadak Yojana shot up to 138 kilometers per day in FY18 compared to 73 kilometers per day in FY14. It's also going to highlight that rural connectivity has reached 90% in FY18 versus 56% in FY14. Rise in rural scheme payments via DBT or direct benefit transfer is now at 100% against 37% in FY14. Interestingly, it will also highlight Brookings' report that came out in December 2018, which noted that India's poverty rate will drop below 3% by the end of 2019. We'll have to see how will this pan out for the ruling party in the general election and what's in store for NSAP in this budget. Back to you.
Okay, absolutely, Anshu. Thanks very much for that. Well, it was a pre-budget cheer on the Lal Street. The markets, in fact, ended with solid gains, with the Nifty reclaiming the 10,800 mark and the Sensex gaining 650 points. Manglam is here with all of the market cues. Well, Manglam, what really stood out was the FII cash buying one day ahead of the budget.
Absolutely, 3,000 crores, no less. But, you know, ahead of the budget, there is a lot of optimism in the air, and it comes from not just our markets, also the global markets. Wall Street yesterday did fairly well. In fact, both Dow as well as S&P 500 ended fairly in the green. They've had the best January since 1987, before I was born as well. So that's good for both Dow Jones as well as NASDAQ. And it's on the back of good earnings coming in from both Facebook and General Electric. Both these stocks higher by 10-12% each. Not just that, that has percolated down to the Asian markets because now there is more optimism in the air with regards to trade talks. There are reports which believe that Trump and President Xi Jinping likely to meet in late February. So all of that is percolating down to a good start for our markets. But yesterday, we talk about the budget, fiscal deficit, etc. The bulls erased the deficit for our markets. You know, we went into trade with 128 points decline for Jan series. The Nifty moved about 180 points, 51 points in yesterday's trading session for the series. While doing so, it moved higher by 20, it moved above its 20, 50 and 100-day moving average, now very near the 200-day moving average. And if the SGX Nifty is something to go by, it will indicate a start above the 200-day moving average as well. And it was a team performance. If you take a look at the contribution chart, all the heavyweights, be it Reliance, HDFC Twins, Axis Bank and Infosys, contributed to the up move that we saw in the Nifty. And it was backed by strong FII flows. 3,000 crores bought by FIIs in the cash market. Even if you adjust for the expiry, 10,962 crore worth cross buying. And there was delivery volumes in corporate-facing banks, be it Axis Bank or ICICI Bank, nearly 2,200 crore worth delivery buying. Feb series ended. The rollovers were slightly lower than the last 3 months, and we're starting on a lighter foot with 1.7 crore shares in open interest. This compares with about 2 crores that we see on an average, and the FIIs, they're 41% long in index futures. That's primarily because there are a lot of events. The street is watching for budget deficit as well as fiscal prudence out there, the RBI policy meet, will be more important. Talking about the budget, we'll have to keep an eye out on stocks, be it ITC, all the FMCG stocks, if at all any rural package comes in, and then there are the results, be it Titan, Dr. Reddy's or State Bank of India.
Yes, absolutely. I think I would be watching out for a lot of those two-wheeler stocks, a
That's
lot
right.
of the NBFCs that have a rural focus in terms of lending as well. But thanks, Mangalam, for that. We need to take a break now. But like Mangalam said, we have State Bank of India and Titan, which will be reporting their Q3 earnings amidst all of the noise about the budget. Key expectations on both these stocks on the other side. Stay tuned.